Well, thank you, Jimmy. Oh, I look a little bit messed up here. I got to make sure I get myself cleaned up here, Shy, for my guy, Gary Brody. Gary, good morning. How are you?
Good morning. Thanks for having me on.
Great to have you on, Gary. We only got a little bit of time with you, so I want to kind of jump right into it. The one thing that comes to mind for me this morning, well, there's a few things, but one thing that comes to mind when I want to speak with you about is Bitcoin and gold, right? Gold, we know, has been in this dominant uptrend, okay? Really, pretty much every macro person out there has kind of just been talking about gold, pounding the table for a while on it. And then you talk about Bitcoin, which is, as I talked about this morning, I don't know if you're able to catch it, but really it's always been, is it a commodity? Is it a store of value, right? Then it's a risk asset. And there's always this conversation that we've had for 16 years or however long it's been around now. And one thing that Bitcoin has done, even though I don't really believe in this too much, is a correlation with Nasdaq and S&P. I think that they're very different in what they are. And I just think that risk assets might go together. That's fine. But what we saw or are starting to see is Bitcoin now starting to gold. Your thoughts on that?
So first, Anthony, I completely agree with you. We started buying Bitcoin around 15,000 in 2020. Started buying gold. Oh, sorry, that was 2021. Started buying gold in 2020 at around 15, 1600. There's no question that over the past few years, Bitcoin has traded like a high beta Nasdaq proxy. I don't think that's what it is. In my opinion, I own Bitcoin for two reasons. One, the main reason is continued debasement of the dollar. Congress is overspending by trillions of dollars a year, and they've decided to fund our deficit with inflation. And the reason they're doing that is because if you raise taxes, you have to talk to the people about it. If you cut spending, you're going to get people angry about it. So Congress is funding it through inflation. They're just printing more money and we're paying higher prices. And the reason they do that is because they can then put the blame on supply lines or, Vladimir Putin or, greedy corporations. They can find lots of boogeymen to criticize if they go that direction. And it allows them to muddy the waters and blame everybody but themselves for the problem that they're creating. The second reason I own Bitcoin is I think we're going to see a massive wave of institutional adoption. People forget that it was just a year ago that the ETFs, 11 ETFs were approved. But at this point, most pension funds don't own Bitcoin. So what happens when massive pension funds start to say, okay, we're going to allocate 0.5%, 1%, 2% to Bitcoin? That is huge amounts of buying, and it's going to be on auto buy. So, I don't think Congress is going to stop spending, and I don't think people are going to stop buying Bitcoin. And, those are two great reasons to own it.
And I want to talk about the big news this weekend. Obviously, Trump wants to fire Powell, even though under the Federal Reserve Act, he can't quite do that. But you have said, Trump wants to fire Powell, but everybody is wrong in this case. So can you kind of go over that a little bit?
Yeah, thanks, Tracy. So, first of all, President Trump is right. Chairman Powell has done a horrible job and has constantly been late and wrong. One of the reasons, I think the main reason for the inflation we're experiencing right now is congressional overspending. But, one of the things that helped create that inflation and made that possible was Chairman Powell keeping rates far too low for far too long. We had rates around zero for about a decade. And then in 2021, in November of 21, I wrote a white paper warning people that inflation was not transitory and they should buy Bitcoin, gold, and energy. Tracy, I know how you feel about that. And so, we had this warning, and at that time, Chairman Powell and Treasury Secretary Yellen were saying inflation would be transitory. They were far too late to raise rates and deal with inflation, so they were wrong on that. And then I spent all of last summer warning people in the Fed, and I don't think they're reading my work, but they should, saying do not lower rates. If you do, it's not going to help anything. And you're going to then be seen as a political actor. And of course, the Fed lowered rates in September, right ahead of the election. And, that made them, whether they intended it or not, it made them appear to be partisan. It looked like a political move trying to help the Democrats. Now, President Trump wants more stimulus. and he wants the Fed to lower rates. And, he's right that Powell has done a poor job, but he's wrong about what will help him now. First of all, if you lower rates, a lot of people don't realize this. They think the Fed has control of the whole yield curve. They don't. The Fed only controls the overnight rate. And so what happened in September and October, November is the Fed cut the overnight rate by about 100 basis points. And then we saw the yield on the 10-year rise by 100 basis points, right? As the bond market priced in more future inflation. So, the equity market said, great, we're going to get lower borrowing rates. And the bond market said, no, the yield curve is going to uninvert, but not the way you hoped. It's going to uninvert with higher long-term rates. And we saw mortgage rates rise. This is the exact opposite of what President Trump wants. This is the exact opposite of what Treasury Secretary Bessent needs. And so, if he were able to fire Chairman Powell and replace him with his own choice, what we're going to get is a lower Fed funds rate. And that's not good for the economy. And it's really not good for the goals of the Trump administration or the Treasury. We're going to end up with higher rates there. So it's a situation where President Trump is right that Powell has done a poor job, but replacing him with his own candidate is not going to go anywhere good.
And is the Fed stuck right now in what they can do as far as rates are concerned? We have the market pricing in 4 rate cuts over the next year, and the market's been wrong a lot on this, just to add. But, is the Fed kind of stuck right now? I mean, what do they do?
Yeah, I agree with you, Tracy. I think the Fed is stuck and there's nothing they can do. We're in a position where inflation is still a problem and, Congress is still overspending by trillions of dollars a year. And the Fed balance sheet right now is almost $7 trillion. And so, if the Fed raises rates, we're going to have, higher rates. But if the Fed cuts, again, what we'll have are, the bond market will price in higher future inflation. And when they do that, you're going to have an increase in the 10-year. And so that will increase borrowing rates for the Federal Reserve, for the Treasury, sorry. And that's, we have something in the neighborhood of $7 trillion of debt repricing over the next 12 months. This was something that prior Treasury Secretary Yellen did, where, she shortened the duration again in an attempt to starve the market for, 10-year or longer term bonds, trying to raise prices on them. It was a political move, and I understand why she did it. But that political move by Treasury Secretary Yellen last year has led to a gigantic wall of refinancing. And so, whether the Fed raises or lowers rates, we're going to have to reprice $7 trillion at higher rates. They're stuck. There's nothing they can do. The expression that, we heard about 10 years ago, 15 years ago, was pushing on a string, right? So the Fed has one end of the string, they push on it, nothing happens on the other end.
Gary, I want to talk to you real quick about Powell. And you said that you agree that he's not done a great job. Well, what has he done to give you that view of him?
Well, first, after the 2008 crisis, I understand why he lowered rates to 0. But once the economy recovered, he kept rates at or around 0 for the next, 10, 12 years. That was a giant problem. In 2021, it was very clear that inflation was picking up as a result of increases in government spending. And, Powell and Yellen said it's transitory. Inflation is transitory. They were wrong, and Powell was far too late to start to raise rates. And then he started lowering rates in September, where inflation wasn't under control. This was the Arthur Burns mistake. This was the same thing that former Federal Reserve Chairman Burns, made in the 1960s, early 1970s, and it led to the inflation and stagflation crisis of the late 70s, early 80s. Powell just did the exact same thing. And, we've seen how it plays out. And again, he lowered rates, the Fed funds rate, but the bond market said, nope, we don't like that. And, started to sell treasuries.
Yeah. So late and then too early.
Exactly. Yeah. Late when inflation was increasing, and then he lowered too early with inflation not under control. And, I don't think that the increase in the CPI and the PPI that we saw right after the Fed cut in rates, I don't think that was a result of it, because Fed rate cuts don't move through the economy that quickly. But I think it was a symbol, a warning that the Fed did not have inflation under control.
Let's just say that Powell stays in his chair for the remainder of the year, which I still think is pretty likely, don't you, Shai?
Yeah, I do think. I mean, his term's up in May of 2026 anyway.
So what do you see him doing in terms of rate cuts? Because we know Tracy's been talking about this a lot, that the market's projecting, 4 or 5 rate cuts. What do you think about that?
I would take the under on that. The thing that's going to make it hard is Doge and President Trump are doing everything they can to cut wasteful congressional spending. I actually think we're in a recession right now, where the private economy, the private sector, it actually has declining performance. And it's being covered up by increases in government spending. In fact, over the last few quarters, the dollar increase in GDP has been less than the increase in debt. And so we have what I've been calling a Potemkin economy, right? So, the congressional overspending gets added to GDP, whether it creates value or not. And I think it's very clear they're not creating value. So, we can have, if we cut government spending, we end up with what looks like a recession, except we've already been in a recession for the private market. And then, we can end up with more inflation. And so, what's the Fed going to do? If they cut, they're in trouble. If they raise, they're in trouble. It's out of their hands right now.
Yeah. We only got a couple minutes left with you. I want to go back to gold and Bitcoin a little bit. You've been an early buyer of both of those assets. How do you see those assets going out the rest of this year?
So I had dinner with a really close friend last week, and we were talking, and he knew I had started buying Bitcoin at 15,000 several years ago, and I asked him if he owned any, and he said no. I think I missed it. It's too late. And so I said to him, well, do you think Congress is going to stop overspending by trillions of dollars? He said, no, absolutely not. I said, well, then you're not too late. I own a massive position in Bitcoin. I have a large position in gold, and it's a play on continued debasement. If you think Congress is going to continue overspending by trillions of dollars a year, it's not even a matter of gold going up. I think gold is holding its purchasing power while the dollar's declining.
Yeah.
And what are your thoughts on the dollar? We are down again. Everybody's been kind of hoping for a bounce, and we just aren't seeing them. I know the administration had said they wanted the dollar lower. In fact, we were at around 90 last time Trump was in office. But is it too soon, too fast? Are you worried about the velocity of this move?
I think the president needs the dollar to be lower. He's very focused on trade deficits right now. A lower dollar would make American goods less expensive overseas. And, right now he's really looking for a win on trade. So I think he wants a lower dollar. And that will help with the trade deficit. The problem with that is, again, Treasury Secretary Bessent has to refinance $7 trillion in the next 12 months. And a lower dollar means higher interest rates. And when that happens, we're going to have an increase in interest expense. We're already, annualizing it over $1 trillion a year. That could easily be $1.5, $1.6 trillion by the end of the year. So, when that happens, the way we're going to pay for that is by printing more currency and increasing the debt. And, guess what that does? We have a vicious circle right now. No matter what they do, it's going to lead to more inflation. The only way out of this is a decrease in congressional spending. And, Congress people of both parties are fighting that tooth and nail right now. I don't think they're going to capitulate.
Yeah, a lot to play out.
Right.
Gary, this was absolutely fantastic. I've been following you on Twitter for a long time, X. Everybody in the chat, show Gary some love. Hit that like button. Go follow Gary on Twitter, Gary_Brody, and then go check out his website at deepknowledgeinvesting.com. Gary, just one of the good follows out there, man. Love your work. I really appreciate your time. I know Shai and I were talking about it this morning. We're very excited to have you here. Thank you so much again.
Thanks for having me
Thank
on.
you.
I appreciate it. Thanks, Tracy.